All right. Live from New York. It's late Monday afternoon on Halloween. Hey, it's Mitch Goldberg. Thanks so much for joining me. I really appreciate you taking the time. This has been just a huge market, huge this month, and on so many other levels than just the up stock market. You're going to hear all day long. One of the best October's, best months, period, ever for the stock market as far as the Dow Jones goes, like 14% gain. But all the major averages had pretty nice gains. Transportation stocks are they're like above their 50-day moving average, which is one of the more bullish things going on that you're not that no one's talking about. So transportation stocks have really started to move. I've got my notes right here on my iPad. All right. Yeah, right here. So we've got a bunch of things to talk about while you're watching this. And I see Carl is out there. Thank you very much, buddy. If you have a question, personal finance, the good stuff that we talk about, stock market, things we're talking about right now, you know, hit me up in the comments. I love hearing from you. It's the best part about doing this. The show is called Be the Boss of Your Money because it's very easy for your money to become the boss of you as opposed to you being the boss of your money. It just we lose control of it and we just can never quite get control back in our lives. So let's keep on the straight and narrow, okay? A couple things to talk about today. First, stock market. Second, overcoming so many odds. War. Election coming up. Endless talk of an upcoming recession. And what else do we have? Oh, China. Export restrictions on technology products. You couldn't throw any more at the stock market than this month. I've never seen so much thrown at the market. And let's talk about Meta, the old Facebook stock, right? Meta. Google, which is now Alphabet. Microsoft. You think of Amazon. You think of the giant tech names that are such a force of size in the stock market. And with most of those plunging, with the exception of Apple, the stock market's still held up because things are working the way they should be, by the way. So it's really a remarkable month. First month, we have competitive yields where you could actually get from a 6-month T-bill 4% plus. So there's all of a sudden other places, there's other places all of a sudden to put your money. Just a remarkable month in so many ways, way more than this. So let me just roll a quick intro. We'll talk about a couple of things. And I want to get home soon to see all the trick-or-treaters and the costumes and my kids. It's going to be fun. So here we go with the intro. I'll be right back. All right. It's enough for the intro. So it's good to have you back. Thanks so much for joining me. I always say I like to do these shows Fridays. If there's something crazy going on in the market, like this past Friday, I didn't bother with the show. It's a lot to do this Monday through Thursday, and I love doing it. But it's that extra day off on a Friday. I'm working, just I don't do the live stream on Fridays. It does get to be a lot, and I just found that the viewership on Fridays was pretty paltry, unless there was like a major shock, like a really severely down day. But we had a severely up day this past Friday. The Dow was up over 800 points, but it was a really good week, a really good month. Broke a 2-month losing streak in all the major averages. So the fact that the major averages were off a teeny tiny bit today is not really that big of a deal. Maybe a little profit taking, a little rest in the markets, a little rebalancing for the month end. So I feel like I want to hit the alarm and go, and say there's 2 months left of the year. There's 2 months to do everything that you said you would do last year financially. Every year at tax season, you say to yourself, I'm going to do better with my taxes next year. I'm going to do better. I'm going to look for tax opportunities or I should say, opportunities to reduce my tax burden or to be, more tax efficient. I'm going to speak with my tax advisor about this. Well, guess what? You only have 2 months left this year. Knock out a week for Thanksgiving week. Knock out the last 2 weeks of the year because of the holidays. Okay. You've got about 5 weeks, and today is already over. So you've got 5 weeks to do what you need to do for the rest of the year. And that goes for all of us. If you were in sales, you own a business, you know what I'm talking about. There's 5 weeks left. So if you're going to do something smart and efficient with your money, if you're going to find out if you should take tax losses or not this year, now is the time to start planning. Now is the time to start looking for legit expenses that you could take. I just want to say, I see you, Elaine, and I get a heart from you, and I'm sending you a heart right back. Did you have that operation yet in your neck? I saw that something on Facebook. I hope it's going. I hope it's going okay. So, a couple of things to talk about. So let's get into the meat and potatoes today of the market. Let me make my screen bigger before I show you this. All right. So let's just see how the major averages did. You know what? We're going to do this first. Okay. So Monday, October 31st. Scary, right? Because it's Halloween. Ooh, scary. Okay. It was only really scary for a couple of things. First, the obliteration of speculators. We already know that crypto investors got crushed. Ethereum, with the big split that they had, excuse me, the big split that they had, Ethereum got crushed. Just crypto investors have been obliterated. Dogecoin, which is touted by Elon Musk, used to get into that, how upset it would get. Like, why is this guy pushing Dogecoin to people who are unsuspecting? I did a whole video about it. I should replay it. Okay. Maybe I'll do it tomorrow. Okay. Maybe I'll do it tonight. It's like I have like a 1 minute summary of that video. All right. So this was a month that speculators got crushed. And speculators had already been getting crushed, but it was like the final nail in the coffin when the last of the great pandemic stocks finally crushed what was left of speculator type portfolios. Because remember, a speculator doesn't just have to be someone who only buys, low price stocks. A speculator could be somebody that is way, way overindulged in technology. Now, I have technology too, but I'm not overindulged in technology. So finally, you saw Facebook get crushed. Netflix had been crushed a long time ago. You saw Amazon, Google. Forget like the Rokus of the world and the Pelotons of the world. It's been crushed. So this was finally the end of the speculators. Okay. I take a look at a stock like Facebook, and even if that stock, the stock price can grow at 10% a year on a annual compound basis, it would still take 7 years for the stock to double. And if it doubled, I'm going to bet most of you are probably still going to be down in the stock. And then you have to wonder if it's even worth holding on to. A real company like Boeing got crushed. Remember that? Some of their planes were pulled from the market because of 2 crashes from their MAX jets. Was that like 4 years ago? And the stock still hasn't even come close to recovering. It takes a very, very long time for companies to turn around and to regain investor trust. It takes for investors today, forget long-term investors. Investors today have the attention span of a gnat. So waiting 4 years is not just a long time. A year is a long time. 4 years is an eternity. And by the way, Boeing's not even close to where it used to be. Okay. Not saying it can't get there. We have to look at a stock from where it is now, where it's going, not say, well, it used to be here. Now we have to go here. We should buy here. That's not how we do things. Okay. So if it was a spooky Halloween, a spooky month, if you're invested in overly tech, I see just people who are speculative investors are typically almost all technology with a little bit of biotech sprinkled in there. So tech, crypto, pandemic stocks crushed. But what was the special thing about this month? What was special about this month is diversification came back into style. So, diversification is a strategy that we use to mitigate risk, but it doesn't necessarily protect your portfolio from going down in a generally down market. Diversification, though, worked because if you held on to your industrials, your drug stocks, your bank stocks, well, guess what? Transportation stocks, which are predominantly, by the way, industrial stocks, that's what worked. They didn't just work; they killed it. I mean, stocks like J.P. Morgan, Honeywell, you're seeing 20% plus gains. Lilly, Merck, both hitting new all time, not just highs, all time highs. Lots of stocks are working. What's cool is, as big as technology is in the major averages, there's so many other sectors that are working now that they've been able to kind of gang up on the technology stocks and overcome. That is what's big about this month. It's not just a month of just throwing in your money in the top 5 or 6 biggest tech stocks, and that's all you have to do. Finally, other things work. Diversification came roaring back into style. What else was really good about this? Accounts recovered a lot. I mean, I can tell you from the accounts I manage, really nice recovery. Part of it is we're diversified, so we didn't go down as much as the Nasdaq and as much as tech stocks. So we don't speculate. So accounts didn't have to go up as much to get back to even. It was a really good month for Mitch's clients, of which I'm one of them, by the way. Just want to let you know. Okay. And if you have any thought or desire to become a client, certainly reach out to me and send me a DM, and we will connect and discuss if we are a good financial advisor dash client relationship. Okay. The other big thing, we went from Tina to Tara. Tina means there is no alternatives. You have to buy stocks. You want income? You have to buy dividend stocks. You want growth? You have to buy stocks. Stocks, stocks, and stocks was the answer to everything. But now there's Tara. So Tina kind of was holding you down. There is no alternative. Now you've got Tara. There are reasonable alternatives. And when you can get just want to see what the lowest time is, when you could get a 3-month, 90-day T-bill for over 4%, that's pretty good. I'll sit this one out with a 4% 90-day T-bill. That's guaranteed. The safest investment there is. Yes, I can say that because the 90-day T-bill is considered the risk-free rate of return, guaranteed by the full faith and credit of the U.S. Treasury. So we finally have decent yields to invest in. So now you're like, well, why would I want to get a stock for 2 or 3% and take risk when I could get a short-term T-bill for over 4%? It's a pretty good deal for a lot of. I'm not saying all of you are going to agree with that, but if enough of you agree with it, it's enough money that comes out of the market or does not find its way into the stock market, and that's what I'm talking about. Okay. Another good thing. Let's talk about earnings. Now, this earnings season has been pretty good, mostly beats in line with historical averages. About 70% of companies are beating expectations, earnings expectations. Now, albeit lowered expectations, but I know a lot of people like to say that, but here's something to pay attention to, okay? Companies that have missed expectations are getting punished severely. And that means investors are more than discerning. They're downright vicious, no compunction. Just investors are just crushing, killing, taking out to the woodshed and shooting any company that misses earnings expectations, and companies that beat expectations, they're going up a little bit. So investors are really holding back. So whoever says, yeah, it doesn't matter that company, corporations beat, publicly traded companies beat earnings for the most part, it does matter because of what I just told you. Investors are much more discerning. Okay. So that's what we have to pay attention to. All right. What else? What was the leader? Economically sensitive stocks, banks, industrials, and energy and materials. These are the kinds of stocks that go up in advance of a positive turnaround in the economy. The stock market is telling you that we're not just looking at a recession or possible recession next year. The stock market is actually telling you it's looking past that already, which is really incredible if you think about it. We're already looking past what could be a recession this year. We're looking already at the Fed cutting rates. We're looking at a 3/4 point increase this week on Wednesday. We're looking at the unemployment figures, the Department of Labor reports the employment figures on Friday, and then we're expecting a 50 basis point interest rate increase to the Fed funds rate in December, and then in January we're going to go back to a 1/4 point. The Fed doesn't meet every month, by the way. The Fed meets 8 times a year, not 12 times a year. Some people think, oh, the Fed meets every month. No, the Fed meets 8 times a year, but we'll probably go to 1/4 point hikes early next year, and then nothing. And we are getting very close to what's called the terminal rate, the rate at which the Fed stops raising rates when it thinks that forces of economic strength and weakness are evenly balanced, aka the neutral rate. Okay. So what else? So diversification pays off. Okay. So tech will take. I'm just reiterating some of the things. Some of these tech stocks are going to take. I'm not talking like the little ones, like the Roku's. I'm talking like the big tech stocks, like a Facebook. It's going to take years and years and years, in my opinion, for that stock to get back. So the quick buck. I like to call the quick buck crowd. The crowd likes to make a quick buck. I thought they were hot shit during the pandemic. I actually had friends like this, and like one of my young lad friends was like, Mitch, I should be. He was actually telling me at one point during the pandemic, I should be your partner. I'm picking stocks. I'm great at this. I know what's going on. I really have a feel for this. I know about crypto, and I don't hear from that guy anymore. Can you imagine the hubris of some people? Like, I've been through this before, and what's going on now? I've been through down markets and but bursted bubbles. What's going on now is like the worst I've ever seen. But not us, because you watch Be the Boss of Your Money, and you're investing in quality. Okay, so that's about it. I greatly appreciate you taking the time to watch. Now we have to talk about what's next, right? What's next? So, does this continue? We're going to have ups and downs, and every time the market goes down, someone's going to say, "You see, I told you stocks haven't reached their lows yet. I told you stocks shouldn't go back down." That may be true. We don't know, and that's the thing. If you're waiting to invest based on that cataclysmic event, that dark, near-death blow up of the whole world, and that's the day you're going to jump in with all your money and ride everything straight up, cash out and make a fortune, and not ever have to worry about taking any risk with your money again, that day for you, my friend, is never going to happen. Because when we are at that dark, cataclysmic end of the world day, you're just going to wait for things to go lower. Oh, when the market starts to go higher, you're just going to wait for it to go back down again. And when it goes back down again, you're just going to wait for it to go even lower. And you're never going to invest because you're going to procrastinate perpetually. When we all know that there's roughly about 48% of trading days are up. Okay, I'm sorry, 52% of all trading days are up, while 48% of trading days are down. That's why we say if you miss just the best few trading days of the year, you've given up any shot to have a gain for years, possibly. This is why invest based on you, your time horizon, when you need the money. Obviously, the sooner you need your money out of the market, the less risk you take with it. Think in terms of that. Think in terms of tax efficiency. You could have some money in a Roth IRA, some in a traditional IRA. If your company has a Roth 401k, maybe you want to consider putting money into that instead of the traditional 401k. There's an article that went out today from a study from Allianz that said many, many people stop contributing to their 401ks, any retirement plan, because of inflation, and some people withdrawing money. I get it. It's either food on the table or invest in your company's retirement plan. I get that. I understand you have to do what you have to do. But these are the things we talk about. These are the things that I want to help you navigate. Okay, I've said it all. Enjoy the rest of the day. Happy Halloween. Don't eat too many Butterfingers. If you don't like Butterfingers, send them my way. I love those. It's my favorite candy. And I'll I should have asked you guys to post like in the comments what your favorite candy is, but we'll do that tomorrow because you're gonna have a lot of leftover candy at home. All right. I'll speak to you. Thanks. Bye.